Perfect.
Should I share the screen? Stop sharing the screen.
Yeah, you can stop sharing the screen.
Okay.
Okay, thank you guys. Thank you everybody for joining in. We were expecting some phenomenal response coming in for the new D2C Insider Middle East chapter, but I think the reactions that we've got is overwhelming, and with more than 150 registrations coming in, with almost 65 of them here right now, I think just talks testimony about how excited Indian brands and enablers are looking at the Middle East market. Let me lay down the flow of the session today. So we will be talking a little bit about D2C Insider and what's our what's the objective of starting the Middle East chapter. I will take that up and then I will pass on the baton to Sudhir from Startify. So he will begin with his introduction and what's the Middle East market looking like and what's Startify in specific is looking to do in the market. So let me begin, guys. I think we've almost crossed the 50% mark. We are 76. So Sudhir, you can pull up the presentation and we can get going.
Sure.
So guys, my name is Kshitij. My name is Kshitij Ladia. I am one of the founding members of D2C Insider. My journey has been into consumer internet for the last 10 years. I'd spent the last 5 years before, into a health tech company, which was PharmEasy. And before that, I was with Car Dekho in Indonesia and Car Dekho in India. In fact, me and Sudhir met, frequently when I was in Indonesia, when he was building BookMyShow there. Over the last 1 year, I have full-time joined hands with Abhishek and we are co-building Almo. A lot of you might know Abhishek already. And, the journey of D2C Insider started in 2018. When we saw that this market is becoming extremely interesting. New age brands are coming up. They are all challengers in their own space. But we all thought that it is important for us to create a community which can, be with each other, help each other in the journey of building and challenging the incumbents. And with that as a mission, the community called D2C Insider was built. Over the last 6 months, we've seen some phenomenal traction on the community. The community participation has grown by almost 100% over the last 6 months. What started as a 10-member, 10 folks coming together to create a community is now almost 3,000 plus members big. So I wanted to just spend a couple of minutes to give you a brief about, what are we thinking at D2C Insider? What's the vision like? What are the guiding principles that we believe that we want to continue to run D2C Insider at? So the vision of D2C Insider is to enable the growth of the D2C ecosystem by providing access, network, knowledge, and capital to D2C brands and enablers. So here, I think some important keywords to look at is one, D2C Insider will always be doing anything and everything to do with D2C as an ecosystem. And we have 3 stakeholders in the ecosystem. We have brands, enablers, and investors. For the brands and enablers, I think we will always be looking at covering 4 aspects, which is access, network, knowledge, and capital. Right? I think a lot of the access part is something that we've kind of solved till now, wherein we've been able to create a peer-to-peer network of people coming together, helping each other out. Let's say a brand getting launched wants to look at what's the ecosystem like, which are the different shipping partners, logistic partners, payment providers, etc. It's all available at one go, and vice versa for the enablers to find merchants. I think a lot of work is something that we're looking to do in the upcoming year with respect to network, knowledge, and capital. And I think today's session covers the third aspect of knowledge as well as access to a new market. So this is something that you will keep seeing coming in frequently this year going forward. And I think nothing could be better than having Middle East as our first initiative in that direction. So guys, what are the guiding principles? And I think as a lot of folks today on the call might be new to the community. And I just wanted to touch upon this, that whatever D2C Insider does has 4 guiding principles. The first is that we will want to do value addition to the ecosystem, and that's what we expect each of our community members to do as well. That whatever we do in the community, we need to add value to the ecosystem, right? It's very easy to come in and extract value out of the community, but I think it's the most important part is giving value back to the community. I think that's the fundamental principle that we have, ensure that it remains in the community, and that's the reason the community has grown so far. Accelerate the growth of the ecosystem, and I think access, network, knowledge, and capital will play a key important role out here. So we want to ensure that a brand, let's say in a tier 2, tier 3 city as well, gets the same kind of ecosystem which, let's say, a metro city brand would get. And hence, how do we ensure that we are able to accelerate the growth for each of these brands or enablers? The third is global expansion of the ecosystem. I think we are big time evangelists, and we believe that the opportunity for the next 5 years is going to be Indian brands and enablers going global, right? I think we were a brand starved market 5 years back. Today, I don't think that's the scenario, but I still feel that 10 times more brands are going to be built in India. And as and when these brands keep getting built, we will have a larger opportunity to go global. And I think that's what we're going to cover here today in the presentation. And the fourth is new ecosystem creation. So I think Shark Tank has been a big eye opener for us in that way. And all thanks to Sony, Shark Tank, and some of the sharks on our ecosystem for enabling that. To see that, there are startups coming in from Ladakh, startups coming in from Dhulia in Maharashtra, places which we have very rarely heard, but are doing some phenomenal work. So I think one of the key things that we would like to do as D2C Insider is help creation of new ecosystem. So can we go to a tier 2 town, help explain them what is D2C, how can we enable them to create a new brand or a new technology platform is something that we would like to do. So I think that's the vision and the guiding principles at what D2C Insider is all about. Right now, close to about 3,000 founders, CXOs in the community, 1,500 plus brands, 500 enablers, and about 250 plus investors. So I think that's a quick one about D2C Insider, guys. Now I'll pass on the baton to Sudhir from Startify. He will take us through his journey, what's the Middle East market like, and what Startify looking to do right now. Sudhir, over to you.
Thanks so much, Kshitij. I just need permission.
1 second. Yeah, Sudhir, can you check if you've got the permission?
Yeah, perfect. Thanks so much, guys. It's great to have so many D2C founders looking to enter the Middle East market and so much interest, and hats off to Abhishek and Kshitij for this amazing community they've built. I have a short presentation, which is an introduction to the Middle East, a bit about myself, and also a bit about Startify, which we are building. In fact, we just started the company. Yesterday was the day we got our trade license. So we are startifying ourselves at this point. But the vision is really to be the force behind the growth of startups and building this entire startup ecosystem in the Middle East, right? And building this entire India-Middle East corridor. I'm just going to share my screen at the end of this. Right, so a little bit about myself. I come from a background in building startup communities and media, and built out Proto, which was a large startup event platform back in India between 2008 and 2010, and then built India's largest TV show on startups and venture capital between 2008 2012. Very early days of the startup ecosystem, much before Shark Tank, and really deep in terms of product companies, and some of the companies which really came to light then are some of the unicorns of today, like InMobi and Flipkart and so on. So sort of the first wave of the Indian ecosystem. Then went over to INSEAD, learned to make better looking PowerPoint decks. And after some time in consulting, which didn't make it to this presentation, I started BookMyShow in Indonesia and co-founded that along with a partner from Rocket Internet. Built the cinema and event ticketing proposition for BookMyShow in Indonesia for 4 years, grew that business to about $10 million, and then moved to the Middle East back in 2019. Moved here in 2019 to set up BookMyShow in the Middle East with a large partnership with the Coca-Cola Arena. Again, built a $600 million business in record time. So what we achieved in Indonesia in 4 years, maybe achieved in Middle East, maybe in a year and a half. Which also tells you a little bit about the market. and also set up a ticketing business along with a promotion business, events promotion business. And then COVID happened, and like all of us was figuring out what to do for a while BookMyShow was trying a virtual event strategy. Finally ended up leaving BookMyShow end of 2020 and joining Lenskart as the CEO for the Middle East region. Phenomenal journey with Lenskart, really growing and scaling very quickly. And in record time, we had 8 stores running in the Middle East. In fact, within 6 months, we had already booked out 8 stores and built a 70-member team with very low attrition and very strong culture. Managed to build a brand in the Middle East, an omni-channel brand across both online and offline for 2 years. And also during this journey of building 2 companies, it really brought to fore the fact that there's a huge opportunity in the Middle East that's waiting to happen. And I say this because I've seen 3 ecosystems. I've seen the Indian startup ecosystem, seen the Southeast Asia startup ecosystem, and now seeing the Middle East startup ecosystem. And I'm going to bring out the opportunity and then talk about the D2C opportunity that exists, right? So why is the Middle East exciting, right? The Middle East is exciting to some extent, one, because there's lots of capital here, which is looking for investment. But the capital that's here, that's looking for investment, is to really build in the Middle East, right? So capital for export, which was there during the SoftBank WeWork era, does not really exist anymore. Capital to build in the Middle East exists. And the venture which I've built, which I've started, which I'm going to tell you more about later in the presentation, is what enables just that, right? So where is the Middle East in terms of venture capital and funding and alternative investment? So 2022, the MENA region raised about $3 billion in venture. Very similar to where India was back in 2012, right? So you can say the Middle East is perhaps 10 years behind India, right? And very similar to India, when India started back in 2012, a lot of the funding, a lot of the investment was in Series A, Series B. And what really got built out over the last decade in India has been really the angels, the angel networks, the micro VCs, the seed funds. And that has really seen this startup boom, right? The likes of venture catalysts and 99 unicorns and the various angel networks scaling, IPV, Let's Venture, and so on. And that boom is what the Middle East is yet to see. Yet the consumer market is extremely strong in the Middle East. And I'll come to that as we keep going in the presentation, right? So like I said, lots of money here. This is the amount of dry powder that's there in the region, right? And a lot of it is to build out this region. And like I said, I was with Lenskart and we were backed by Alpha Wave, which is also part of the Abu Dhabi Sovereign Wealth Fund. And a lot of that money is really to build out in the Middle East and to build this region out. However, the Middle East startup ecosystem is still in its infancy, right? So while there's a lot of money to build out the region, the number of exit stories are a few. The technology talent is limited. The access to global markets has also been limited so far because fundamentally the economy has been extremely oil dependent. The economy has been one where it's been over 50% on hydrocarbons, and also because it's such an attractive industry. And while this oil has been extremely profitable, over the last 5 years, there's been this complete shift to consumerism, complete shift in Saudi launching Vision 2030, more and more sovereign wealth funds launching venture capital funds for tech. And this is also the opportunity here, right? So just to give you a sense of the Middle Eastern startup ecosystem, right? So these are some of the key deals that have happened over the last decade or so. So Angami, which was the Middle Eastern Spotify, valued at $220 million. Soup was sold to Amazon. Kareem sold to Uber. Talabat, which is the food place, sold Delivery Hero. So some of the verticals, a lot of the verticals have found the initial exits. As you can find that while the population here in the UAE is only 11 million people and Saudi is 35 million people, the spending power here is 4x India, right? So if you add UAE plus Saudi and you multiply it by 4x, suddenly you're talking about 150 million people. And 150 million people, 100% internet users is actually a strong market. And I think the real e-commerce users in India are probably in that ballpark, right? And therein lies an opportunity in a sense that this market is actually not small. It's quite big. That too, taking only UAE and Saudi. We're not even talking about Qatar and Oman and Bahrain, which are smaller markets, high per capita income markets, but not talking about Egypt, which is a 100 million market, right? This is also some of the recent companies which have raised money. So you'll find buy now, pay later, that's been gaining traction, logistics and trucking, fintech is gaining traction. Kitopi, which is a huge cloud kitchen firm, has raised over $800 million, right? OTT, video, classified. So if you really look at the evolution of startup ecosystems, it starts with online classifieds, then evolves to media, then evolves to e-commerce, then vertical e-commerce, and then fintech, and then deeper fintech, right? So the startup ecosystem from in terms of what these companies are doing is reasonably evolved. But in terms of the angel ecosystem and the seed ecosystem being built up is quite behind, which is where the big opportunity is set to happen, because more and more angel, there's more and more government backing in terms of colleges and schools also backing startups and startup incubators out of colleges. So this gives you a sense comparing India and the Middle East. India, VC investment has grown at a CAGR of 32%. Really, the big boom has come since 2018, as you can see. And while the MENA ecosystem has been quite nascent, it's really started growing now between 21, 22, and a lot of it has been built out of Saudi, right? So if you look at where India was back in 2012, which was 3 billion, and look at where we are in MENA, it's about 3.2. So you get a sense of the 10-year gap, right? And you also get a sense of the difference here. Unlike India, while India was a huge market, not as much government backing, and Middle East has the advantage, apart from a big consumer market, also big advantage in terms of numerous entrepreneurs and numerous companies wanting to set up in the Middle East because they see it as a global hub, right? And because Dubai is already a extremely global city. And that is also an advantage in UAE's favor, right? So as you can see, this is important to see in terms of per capita income. The per capita income of UAE is almost $80,000. Saudi Arabia is $50,000. So it's really a Western market from that perspective, right? And this is where the opportunity, just anecdotally, Indian companies that are set up here, your Zomatos or your Lenskarts or your BookMyShows, all of them, the pricing, at least for Lenskart or even for other Indian companies, the prices average of 3x to 4x higher in India, right? And consumers are willing to pay. Consumers are willing to pay value, and a lot of markets, you increase the price and sales actually goes up, right? Because of the luxury consumer market being the way it is. Also, hence, because it's seen as a Western market, it's also a high trust market. And hence, focus on brand, focus on PR, focus on storytelling is extremely high, and creating that sheen on who you are and how you stand out, right? What is also important is real quality of service and delivery times and so on. So while you can get set up here reasonably quickly, to really scale a business, it's sort of one needs to cover most bases in terms of delivering a global consumer experience, because consumers are global and also to a large extent not necessarily very forgiving. So it gives you a good sense of the population in the different parts. Saudi is growing. UAE population is set to grow, is growing very quickly. You might be aware of the Golden Visa program and various other visa programs. And the internet, mobile penetration, social media penetration is extremely heartening. And if you look at the next slide, you'll find that the number of people who buy groceries every week, the number of people who use smartphones every month, or number of people who use food delivery every week, extremely high, right? This also reflects in a company like Zomato, which scaled extremely quickly in this region and was finally sold to Delivery Hero. And I'll tell you more about that in the next slide. Right, this is extremely important, and this is what a lot of people get wrong. One of the biggest strengths of UAE is in fact its population and the split of its population, right? So only 12% of the UAE population is local Emirati, which means some of the challenges you have in other markets where there's a strong preference for locals does not exist in the UAE. They fundamentally want foreigners to come and set up businesses because the Emirati population is extremely small. Only now have they come up with very, very mild laws on Emiratization, but yet fundamentally extremely pro-foreigner and pro-foreigners, pro-merit and pro-building out companies, right? And extremely, yeah. And while the local population is small and while the South Asian population is 48%, actually the spending power is inverse, right? So the spending power is primarily built out of the European population, the other Arab population, the other GCC population. So what a lot of brands, while building up global presence here, what they do is focus on really the Western expat population, which then spreads to the Arab population. They are the influencers with the spending power, which then feeds into the Indian population, as opposed to doing it the other way around, where you focus on the South Asian population. Value as a concept in the Middle East fundamentally doesn't really exist because, you know, what people want is some level of luxury. Even value from a say, take a brand like Lenskart, value again there was because the quality is extremely high, and the quality was extremely, it was also extremely glamorous as a brand with the way it was set up over here. So accessible is a virtue, but not necessarily a value, or cheap. It's less of a virtue. KSA, on the other hand, is a little different. KSA has a much stronger local population, right? But again, high per capita income and much more homogeneous, extremely Arab-based, right? So in the UAE, you can set up as a primarily English first brand with some Arabic, but you can't do that in Saudi. Saudi, on the other hand, is big population, lot of incentives from the Saudi government, and big city oriented, right? So you capture Riyadh, capture Jeddah, capture Dammam, you capture a large part of Saudi, and you can again scale quickly. Also, the good part is here, since the internet evolution has come out low, if you come out with a strong brand and strong promise, the competition is relatively low. I'm just giving you a small case study on Lenskart, and I spoke about building out brand and spoke about building out trust, right? So some of the stuff we did while building out the go-to-market strategy included launch events, including localizing the brand with Arabization, large influencer place, stunt base where Lenskart took over the entire Ain Dubai and put its logo there. So a lot of strong PR. We actually won the new market entry of the year at the end of the year. Performance marketing, a lot of alliances and partnerships, right? So, and 8 stores. So well-rounded, and the brand was everywhere. You know, fundamentally, other brands that have tried to set up here with one store or just getting into marketplaces, that beyond a point doesn't really work, because you need to continue reinforcing it in a very evolved retail market, which is what Dubai is. Very evolved retail, very evolved food market, and also evolved online market. Giving you examples here of other D2C brands that have scaled in the Middle East, right? So chocolate, desserts is a big category. Foods, dates is a big category. There's a brand name Pachi, which some of you must have heard of. Started actually founded in Beirut, but really took off from the UAE, which is very common. A lot of Levant entrepreneurs set up their businesses here in the UAE because it's much easier to get talent, much easier, much more supportive in terms of government infrastructure. And they've scaled to revenues of almost $30 million, right? Which is also, and perhaps must be in over 150 stores, right? So, and over 30 stores in the UAE, plus a big export brand. Similarly, Aiva, which is also in the eyewear space, 60 stores, 11 in the UAE, right? But also built as an online first brand, and has seen a lot of growth in Saudi, primarily with influencer model. These are case studies of 2 brands from India, which had an interesting story. started with both its food discovery and delivery platform, also offered Zomato Pro, right? Became very popular looking at the South Asian market, but also looking at the global market, also looking at at others, and scaled to an annual GMV of about $30 million. Finally, ended up selling in 2019 for over $150 million, primarily on the back of the potential for future growth, both in UAE, in Saudi, and in the region, which explained the high valuation. And now Talabat, Zomato and Talabat continue to exist for 3 years, and now finally the Zomato brand for food delivery was phased out. This happened about 2 months ago, and now it's all Talabat. Similarly, Lenskart started as an omni-channel play in 2021, became the number 2 player in the eyewear space in terms of number of stores after Maghrabi, and the number 1 D2C player in the market. And revenues set to about $4 million in year 1, and set up 8 stores, probably finishing the year at about 13 stores, including marquee malls like the brand in very quick time. And what I'm trying to say is that unlike Southeast Asia, which has a lot of, which is mired in legal complications, mired in not necessarily advanced, advanced ecosystems to grow and scale your business. In the Middle East, you can scale much faster and also get value because of the higher price of your product. I'm going to talk a little bit now about distribution channels for D2C brands, and some of you might be from different categories, right? So firstly, it's extremely evolved. The market's quite evolved to get to, and hence one can move quite fast. So the groceries, ready-to-eat category, some of the key brands you can see, there's Spinneys, Carrefour, Now, Cream. Sixth Street, in the fashion space, there's Namshi, which is owned by Noon, which is the large e-commerce player here. Unas, which is the fashion player. Sixth Street, which is actually owned by the apparel group. Within general e-commerce and electronics, again, Amazon, Noon, Sharaf DG, and within healthcare and within pharmacies, there's Boots, Aster, and Life Pharmacy. And all of these, most of these have an omni-channel presence with different strengths. And this is part of what we do at Startify in terms of helping you get set up in all these distribution channels. How do we set up? How does one set up in the UAE? Firstly, it's extremely, I think the question you might be asked very early when you're setting up and your setup journeys, do I go for a free zone or do you go for a mainland license? I think this question is over asked and actually quite unnecessary, because D2C companies or anybody who's selling anything in the mainland has to fundamentally go for a LLC trade license, which is the mainland trade license, right? It costs you about $6,000. Generally tends to take you about 2 weeks in the complete process, and then the bank account can also be run in parallel. So you can be going in a month, up and going in a month. Also, one must recognize that UAE is not a tax-based economy, but a fees-based economy, which means that there will be some fees at every step, which is how the government essentially makes its money. Of course, there is no corporate tax is just coming in now, and we'll go through that in the next slide. And there is VAT of 5%, but fundamentally the tax rates are extremely friendly. There is no tax for employees. There's no income tax, as you might be aware, right? So if you are setting up here and you are a D2C company looking to sell in the mainland and sell in UAE, then the mainland license is what you should look for. If you're doing a B2B business primarily focused on export-import, then free zone is quite attractive, and you can look at free zones like DAFZA and so on and so forth, which we can guide and advise you on basis the type of business you're doing. I mentioned the tax. So this is the corporate tax which is coming in. UAE has perhaps one of the lowest tax, extremely attractive to do business. Really using the Singapore strategy from maybe 2 decades ago to make it a business hub, and UAE looks up to Singapore for all its learnings. Corporate tax rate of 9% on profits above $100,000, approximately starting June this year. Also, there are multiple exemptions here. VAT of 5%, which is charged to the buyer, and there's also custom duties and an excise for export and import. It's very hard to cover all of this in extreme detail in this presentation because one must realize that there are different taxes, different structures, depending on what business you're in. And similarly, when you're setting up your company, the first part is determining the trade license, but invariably, depending on the space you're in, there are certifications you need to get, right? So for instance, there are certifications for food, there are certifications for health, there are certifications for if you're doing finance or fintech. So, but the good part is that a lot of these government bodies are extremely responsive. You have a clear timeline of what's going on. You can meet them, present your case. Extremely pro-business. And that's also what we do as Startify, because we've worked with a lot of these government bodies while setting up companies for one to make quick progress in terms of doing things the right way. Cool, we're nearing the end of this presentation. So fundamentally, that's the Middle East market, right? And it's exciting because it's quite untapped. It's from a D2C standpoint, it's a big consumer economy which is willing to spend. It's a strong distribution ecosystem, and a market which is in Saudi and the GCC, which is only growing and is really changing its focus from being oil-based to being consumer-based, right? What does Startify do? So Startify is a platform which we like to call it a force, which is helping startups expand the Middle East and create the next 100 unicorns in the India-Middle East corridor, right? Really, phase one of what we're building out is a go-to-market accelerator to work with companies which are looking to launch in the region. What do we offer? We offer fundamentally a mix of a variety of services, starting from setup, incorporation to positioning, which is most important across brand, PR, design, customer acquisition locally, which is across performance, social media, CRM, distribution, which is both online and offline because of our strong networks in marketplaces and retail, and finally access to fundraising. Right? So that's fundamentally what we do. We've already begun. We've got a couple of clients already working. We're setting up the D2C Insider chapter for the Middle East. Also, soon working on a large event with a government body here, which will also have a D2C pavilion for numerous venture funds who are looking to launch their portfolios in the Middle East, right? And love to have a chat if you would like to learn more about working with us and accelerating your growth in the region. This gives you a sense. We are in phase one right now, which is building out to go-to-market accelerator, but the media event platform, which is really a Inc. 42 or Your Story TechCrunch equivalent for the Middle East, is also in the works of being built out. And finally, we are going to we're in the process of setting up a Adgm structure with $100 million fund to invest in companies which are launching this region along with a angel list like Deal's platform for companies, along with jobs and experts, really bringing together the ecosystem across discovery, acceleration, and capitalization, which is where we think various stakeholders, including entrepreneurs, investors, the government, and excited and keen on seeing this and making this happen. This gives you a sense and really a 5-step sort of setup, brand positioning, customer acquisition. We work with some of the best partners here, obviously coming out of experience in operating companies here, and we at this point we charge between which we have a model which is a 6-month model, which is a combination of a retainer and revenue share. This is where you are in your growth journey, and we take on 5 companies per quarter, and it's just beginning now in April. Fantastic. Thank you very much. Thank you for being a part of this. Love to take questions, Kshitij. So please advise on how you'd like to take this.
So Sudhir, a lot of during the registration, people had asked us a lot of questions. So
Sure.
I've curated some of them. So
Great.
let's begin. I think the first and the most common
Should I,
theme.
should I stop sharing?
Yeah, you can.
Right.
Right. Hold on. Yeah. So I think for the first and the most common question theme that I could see is people talking about pricing. So I think people want to know that what should be the pricing strategy as far as Middle East market is concerned. Does it vary from category to category? And there is a general perception that if you're selling in the UAE, because it is not value mindset, you may be able to command a higher premium on your product. So a little bit of a flavor on pricing and how does it work there.
Sorry, Kshitij, I missed the beginning of that. It was a connection lag. Can you just repeat it?
Yeah. So Sudhir, I'm saying the overall theme, a lot of questions were related to pricing in the Middle East.
Sure.
So I think the general perception in India is that while you are selling in Middle East, you could be able to command a higher premium because it's not a value conscious market. Now, does this what is the price multiplier difference between India and the UAE, and does it vary from category to category?
Sure. So I think that that it definitely varies category to category. I would say that in fashion, it's definitely 3x, 4x. And fundamentally, one thing you must realize in the Middle East when you're coming here, cost plus pricing just doesn't work, right? We just forget about it, right? And also, you must realize that in retail, the country is on discount for 280 days out of 365 days, right? So the retail calendar, the way it is built, and happy to take one through that at some other point, is that because retail is such a big driver, the retail calendar is driven by Dubai Tourism, which is the government body, because it's a big driver for people coming in here. And the Dubai Shopping Festival, followed by Dubai Summer Surprises, Eid, all of these are there. And actually in this country, you have to take permissions to give discounts, right? So fundamentally, consumers are also hence, while consumers are also expecting discounts. So hence, if you come in maintaining a low margin on a low gross margin, then it's going to be hard because you'll have to find a way to give discount because that's what consumers are expecting. And B, if you give a discount on a low margin product, then you are really operating at a very low gross margin. And the right gross margin to look at is over 70%, sometimes 80%, right? Or over 80% is, if you go below 70%, it becomes hard, given where you are, right? That's one part. The second part is that because it's such a big luxury market, and this concept of Veblen goods really implies here, where price is seen as a signaling of quality. And that's very strong, right? So hence, I would say that when in fact, at Lenskart, at one point we increased the price and there was almost double and there was no decrease in sales, right? So I would say that rather than looking at cost plus, A, look at what your gross margin needs to be. B, look at your competitor segment and who is your real competitor segment, right? And if you think there is an opportunity to undercut them and come into the market with lower price, right? That might not necessarily play out because the signaling of quality is strong and then people don't buy. Also, inside the UAE, depending on where you are, different strategies hold, right? So in Dubai, in Abu Dhabi, there are malls which are have more of a South Asian audience. There are malls which have more of a Western audience. There are malls which have more of a local audience, right? And you could have different strategies in all those depending on the ethnicity of the local audience. And the different ethnicities have very different buying tendencies. For instance, Indian stores, Indian or brands which target Indian audiences during Diwali actually see a massive dip in Dubai because all the Indians have left, right? And similarly, for a non-luxury brand, when it launches a luxury product in a Arab market, and if it's in an Arab area and if it's done well, really has a big impact because you find Qataris and people from Qatar, people from Oman who for them buying is a part of their entertainment holiday. right? And they just want to try out new things. And very common to make 3,000, 4,000 dirham purchases from a new brand just to try it out, right? Because I mean, fundamentally, I don't want to say this in a public forum, but these people are well looked after by their local constituents, right? So let's just say that purchasing power is extremely high, but find the right balance and mix, right? If you're looking at food and looking at categories like uh, uh, everyday products and food, you can't mark it up as much, but definitely then between 2x and 3x. Also keeping in mind that there could be promos and so on and so forth running at different times of year. Last point I'll make, Kshitij, it's also a function of the work you do in elevating your brand, right? If you spend a lot of time in elevating your brand, storytelling, getting the right partnerships, that dictates your pricing power, right? If you just and it needs to come out with a global presence, it needs to come. Unfortunately, there is a bit of a there are some stereotypes that hold, that Italian fashion is the best, German or engineering is the best. So some of those stereotypes hold, but you can emerge with a global story, and depending on the brand, to come up with a global story with the right influencers and the right partnerships, such that it gets elevated and dictates your pricing power.
Got it. Well, I think makes a lot of sense. I think there's a similar question on the last point that you mentioned, Sudhir. So I think typically in India, brands are being built more on distribution and lesser on brand building, right?
Yes.
How's the market there in the UAE?
No, it's the other way around, right? Because if you fundamentally build something which is basis distribution only, you will see some traction, right? But at some point that traction will die down, because the discovery, the serendipitous discovery, which maybe happens in a 1 billion population, doesn't necessarily happen in a small population, right? Because it's high trust, right? It's the way the marketplaces are also set up are high trust, right? So they are recommended products, this, that, and the other, which means that fundamentally few products will get all the attention, and the others might not, right? I mean, there are brands like Color Plus and a few others that have tried to set up here with one store, and let's see how it works. But fundamentally, it's not really worked for them, right? And because you need to come in, with a predicated strategy and then build it out. You could start initially with your marketplace trying to see what to do, but you need to move to phase 2 very quickly.
Right. I think this was a question coming in from a lot of folks, that a theme was that should we start selling from India right now, take a VAT license and do a dropship, rather than setting up a trade license in the UAE? What's the right approach to launch?
Yeah, I mean, you could do that, but why is the consumer going to buy from you, right? And I think you could do that to get a sense, but it's also going to give you the wrong signals. And if you see some success, it might bite you later. And if you don't see any success, then you might not know, because you never really properly tried, right? I would, and actually to do some brand building PR here, it's not expensive, right? It's not that expensive. And also to set up your team here and to get going here, again, it's a function of setting aside a certain investment and making back your income. And stores here pay back between 2 and 3 years, right? But once they pay back, they really are extremely profitable for a long period of time because of the high pricing power. And actually, ironically, the high pricing power is not reflected in the high salaries. Salaries are not at 3x, 4x. Salaries are maybe 20 to 30% more than India, right? At least for retail, right? So I mean, for even for senior management, for corporate stuff, it's given where Indian salaries are now, which are extremely high, right? Your salaries might be 50 to 60, 80, 70% more, but not 300% more. And that's the gap and the opportunity that you have. I think what is the challenge in the Middle East often is the right knowledge, strategy, and access. Right, it becomes who you know rather than what you know, and how are you going there? And also because retail is so advanced here, it's a seller's market, it's not a buyer's market, right? So to get a store in Mall of the Emirates, there's probably a waiting list for 2 years, right? So how do you build that story to get there? What are the ways to get there? What are the different strategies? And that's part of that is what we do at Startify, which is helping brands get there, and there are ways to get there.
Right. I think just touching upon the store concept that you mentioned, right? So I think, see, today in India, I think the theme that we see is that a brand scaling up to, let's say, 100 crores for a brand by just being online is something that we feel is achievable over a period of 3-4 years after launch.
Got it.
But how do you think? But India is a much larger market from a overall size standpoint, right?
Right.
So what do you think should be the channel strategy as far as UAE or the Middle East is concerned?
So I think the Omni is the strategy that works. And I think if you're a smaller brand, let's say you're making, say, just homemade, they say some exotic chocolates, right? For luxury chocolates. I think the right approach would be a combination of special retail, right? And there's lots of special retail opportunities across kiosks and exhibitions that happen through the year, right? And your own D2C Insta, we're influencer based, right? And multiple marketplaces. Now, if you do something like that along with PR brand positioning, then fundamentally it is a distribution game, but it's really it's more than distribution. It's distribution plus. It's omni, right? If you were to just rock up and start selling, try to sell on InstaShop and Talabat won't recommend it to me. Right? Because the signals to discover brands here without a lot of marketing, without an influence, it's just extremely difficult. Because why? Because guess what? Everybody else is doing it.
But then let's say, see, on the community today, like about 80% of the brands that we have on community are bootstrap. A lot of the brands, let's say majority of the brands would be in the bracket of doing about, let's say, 10 to 30 crores in India, right?
Yeah.
Now, for a brand like that, obviously making a significant investment to launch UAE might be a tough.
Absolutely, Kshitij. So we at Startify are working on a model which will enable that, right? And it's work in progress. Currently, we work with more Series A, Series B companies, but we're working on another model for more bootstrap companies which are at the sub 50 to 100 crore level. There is a way to do that, but it can happen if a bunch of companies come together to get scale, right? And and then once you do that, then you have pricing power. You have you can negotiate much better rates. Also, retailers take you more seriously, and you get specialized. And I think that's the go-to-market opportunity, which is win-win for both.
Right, got it.
Right, and that's something we're working on in our phase 2. We've just started working now. We're working with, if I can share, working with 2-3 companies. I don't reveal the brands right now, right? But really, these are brands which are larger and looking to get set up and get going. But with the D2C Insider event we're planning for later, with the D2C Pavilion, I think there will be a lot of opportunities for D2C brands to get up and going. And also because really this is an extension of India, right? And you can get going quite quickly, right? And come up with a model which does not involve onerous marketing costs, but enough to make the impact.
Got it. So I think it looks like there's an opportunity of aggregation and distribution.
Absolutely. And I think that given the D2C wave that's happened, also it's increasingly easy for us to bracket some of the D2C brands in categories, right? And the good part about the retail ecosystem, the marketplace ecosystem, is they are fundamentally risk takers. And if you have a story, they're happy to take a bet, happy to take a chance, right? Because for them, it's very important to have vibrancy in their malls, very important to have something new. And retail here is very evolved. For them, retail is a science, right? And when you walk through a mall here, I mean, they've thought through, it's crazy how much they've thought through everything. They've thought through, you don't see malls like that with the detail. And I'm not talking about Dubai Mall necessarily. Dubai Mall is not really a mall. It's really an entertainment zone, right? But if you look at the Majid Al Futtaim malls, right? I mean, it's extremely clinical and how everything is extremely thought through to maximize best discovery, exhibition, and commerce for the retailers. And they go out of their way to make the retailers win. In fact, during COVID, sort of unprecedented that the rentals were waived off in most malls in that period, or they moved to a revenue share.
Got it. And in terms of the market today, what will be the online to offline split? Just from a ballpark standpoint.
So I think it would be in the region of 90 to 95% to 5%, because retail over here is really big, right? Online has also been picking up, but retail has sort of seen a huge second wind post-COVID. Also because malls have invested a lot in making retail entertainment oriented, right? So you have, some of you I'm sure are familiar with Dubai, but Dubai malls have a ice skating rinks, ski zones, right? Sort of laser shows and different drone shows almost every evening, right? So water parks, all these crazy things inside a mall, right? And guess what? Saudi and Qatar are doing it even bigger. So whatever Dubai does, Saudi does 3x and Qatar tries to do 4x. And with Qatar, after the World Cup, and I think it showcased itself. It has really put itself on the map, right? And there are opportunities there to for it to really rise. And they realize that there's only so much that can come out of the homegrown population, right? A lot of this flavor, exoticness, the different products has to come from outside.
Got it. I think on the category, so Sudhir, if you look at some of the marquee brands who made it big in the, let's say, the US market, right? So we have Vadham Teas in our community, right? Built a massive business in the US because of the Indianized or the Indian theme of a tea, right? Or let's say Ayurveda brands doing phenomenally well in the US. So what categories do you think are, some you feel could be an interesting play from an India to your Middle East story?
So I think if you look at the Indian population here is, as I said, 46% South Asian population. Of that, 30% is Indian, right? Of that 30% Indian population, maybe if you remove the blue collar workers, so as to say, right? So you're talking about a reasonably mid-income to high-income population of about 20%, right? Say about 1.52 million people. And out of those 2 million people, maybe 50-50 is 50% are really Dubai Indians who have been in Dubai all along. And about 1 million people are Indians who have come recently in the last 5-6 years. And the Indians who have come recently in the last 5-6 years are also people who frequent India and who keep coming and going, right? And also people who have been associated with Indian brands while they were in India, still very familiar with those brands when they come here, and they're still looking for it, right? And that is a real sweet spot that really helps you. They become the influencers, they become the people who take to this very early, right? If you're in a Indophile category, and they become your initial trust, right? Initial growth movers. But again, these Indians have come here and they have a Western mindset, right? They also shop at a Massimo Dutti, or they shop at a Gucci and Prada, right? And hence you can't get away with the same thing. It's the Indian brand reinventing itself, providing almost global standards at prices, at not Gucci prices, right? That's the model, right? At much below Gucci. That's the model, that's the sweet spot. And that has been the sort of the Lenskart story, in some ways also the Zomato story, in terms of the fact that it was offering global food and very globalized brand and sort of tech at restaurants, right? But innately cheaper than its market, than the competitors. So I think that's a good playbook for an Indian brand, right? Which is looking at that. Now, if you are looking at if you're not selling a product which is necessarily has Indian roots, right? Then you look at a different strategy, right? And you could also look at a rebranding, which is for this market. right? And if you look at Kyra Skincare, or if you look at other brands, some brands have done that. So, for instance, there's a brand called Sakur Brothers, which is a Portuguese brand actually, but no one would know it's Portuguese. You go in there and you think it's really a Levant Arab brand, right? And perhaps the number one or number two men's clothing brand in this region, because they have managed to capture this Arab mindset by showcasing itself like an Arab brand, right? Or you look at, say, something like in cosmetics, something like a Charlotte Tilbury, right? Which again has reinvented itself here as really high-end cosmetics, really bringing out gloss, using a lot of attractive VM, right? Using a lot of interactivity engagement in creating that experience, right? So you really need to you need to spend 80% of your time on yourself and standing out, and 20% of your time on distribution. Otherwise, you'll fall flat on your foot. There's different playbooks for different brands, right? I think this question can be answered in more detail when you know of the brand, because then the storytelling is different.
Correct. So I think two related questions. One is that if you look at the Indian market, we really like brands that come in with an international feel or an Italian feel, right? Sure. What is the mindset there? So let's say if I am a brand from India, do I create a brand which looks more global, or do I kind of target the it being more Arabic, right? What do you think is the right strategy?
So it depends. It depends on what you're doing. In some categories you can get away with it, some categories you can't, right? If you're saying, I saw somebody had a perfumes question. Perfumes is huge here, right? So in perfumes, you could get away with trying to have an Arab positioning, but again, very hard to compete with Arab perfumes, right? I mean, because it's really extremely crowded market, and whatever you do, I mean, some of these perfumes are in gold bottle. I mean, it's very hard to compete, right? If you've traveled in Dubai, if you've been in Dubai, there are perfumes everywhere, and also a high margin category, right? I think that fundamentally global, the go-to positioning, right, which tends to work different shades, different layering of it, is global, young, trendy, aspirational, right? Which is targeting the younger audience, but actually bringing the slightly older audience. So targeting the 25, 35, but hence attracting the 35 to 45, right? And that and global position, that positioning tends to work, right? And in different shades, right? So and there are many examples of that. Even when Titan has launched here again, which in India is more staid and much older brand, here again they've taken on a younger positioning.
Got it. I think one question comes up, I think again going back to pricing, Sudhir. So I think someone has asked that if I price my product at 100 in India, can I price it at 400 in the UAE?
Right. I mean, it depends on the product, right? I think that, like I said, it's a function of your gross margin, function of that category, right? And hence, I would say that basis that it's anywhere between 250 and could be 500 also, right? Right. And also a function of how much you spent on building that brand out, right? There's no one answer fits all. And when we were building out Lenskart, we also found out initially, in fact, it was we had prices as too cheap, and then we had increased the price.
Got it. So Sudhir, I think you and me discussed this when we were doing our initial conversations, but I think there is a question that the Middle East is a lot dependent upon brands imported from the world, right?
Yeah.
What's happening there in the D2C ecosystem? Are there homegrown brands being built, or is there a wave towards government supporting more D2C brands being created, or more homegrown brands being created?
So there is that wave. But truth be told, the population in the UAE is extremely small, right? And a lot of the young entrepreneurs, young students come out, a lot of them, the government absorbs them themselves, right? So So are there a lot of D2C local UAE brands being created? No. Right? Are there a lot of, is there a D2C revolution that's happening in Saudi? Absolutely. So Saudi is more like India, right? And in Saudi, there's a big D2C revolution happening, but with more Arab-oriented products, right? So you have Arab handicrafts, you have shisha, you have designer kanduras, right? All of these things which have more of an Arab orientation, right? Now, is there something? Are there categories that are available which Indian brands can look at, which are non-Arab? Absolutely, right? Can an Indian brand compete in an Arab category? I would say it's hard, because the knowledge of Arab community, Arab ecosystem, ahead. It's like getting an Arab person to get a sense of the Indian psyche, which is not necessarily easy, right?
Right. So, Sudhir, I think I'll take last two questions, and maybe then we can. I think going back to the channel strategy, we discussed online to offline, but I think most of us have been, doing online more than offline in India, and I think that would be there will be a natural tendency for all of us to maybe begin the journey online and then maybe out offline. So within online, like currently, I would say that in India, it's a 70-30 split. 70% of business happens on marketplaces, 30% happens on the own website. And within the own website, there is a large share coming in from traffic coming in from Facebook and Instagram, right? How is the landscape on the digital in specific out there?
So similar, it's I would say that that firstly one must look at online. Omni is the right way to go. If you don't go with offline, it tends to be a problem, because offline is also a big brand builder, right? In terms of the channels that work, it's a big influencer social driven market, right? So Snapchat is big, TikTok is big, Instagram is big, right? Influencers are extremely big, right? It's this storytelling, right? Which is also then backed with a lot of creative visual merchandise at the stores and marketing automation at the stores, which then works and helps you build your brand, right? The older channels, your performance, your stunts is also very big, right? So at Lenskart, we took over the Ain. So stunts are very big, and a lot of brands, Cars 24 has also done something with the Burj Khalifa and so on, right? So the D2C strategy hence is influencer, Snapchat, TikTok, social led, right? Stunt led and creative retail led, then followed by performance, as opposed to performance leading it, right? Which then will have much lower conversion rates.
Got it. And within the marketplaces, Sudhir, which marketplace, let's say you typically begin with? Like in India, we know Amazon is the go-to channel for most of us. If you're a fashion brand, we know Myntra is the go-to channel for most of us. So what do you do there? I mean, you start.
So it's an interesting question. I think Noon has really gained in prominence, right? Over the last 2 years or so, and has become the go-to number one platform, right? Amazon is also there, and Amazon, because of Amazon Global, is also easy, right? But I would say that if you start with Noon and then you get Namshi, then you work with Amazon, right? You will find most D2C companies are finding more with Noon as opposed to others, right? You start with that. And when it comes to food or comes to packaged foods and so on and so forth, then depending on the ethnicity, depending on type of food, again, different channels, right? So your Spinneys, your Waitrose is more premium. Carrefour is more, is also Western, but more middle to premium, right? Talabat is very Arab, more Arab, right? And Deliveroo is more Indian, is more, again, global and more Indian, right? Is now becoming more Indian, right? So It depends on Zomato, obviously went away. Zomato was very Indian. Right? So it depends on where you are. InstaShop is also a good channel, right? And there are others also coming. There's a new platform called Polygon Rooms, which is doing D2C, which is doing logistics only for D2C. So there are a lot of enablers coming in, right? And I think it's one, depending on your product, once you get your determine what your positioning is for this market, that also to some extent determines your distribution strategy.
Got it. Right. So I think a lot of these questions might need more detailed understanding of the market. So I think Sudhir, you are there on the community. People will reach out to you for specific questions. So I see questions related to specific categories. When Neha is asking about consumer electronics, Tamanna is asking about nutraceuticals. So I think in the interest of time, maybe we'll not go to those category level questions right now. But
yeah, I would recommend that people check out Noon and understand Noon. And Noon is a good starting point for, and Amazon, of course, but Noon is a good starting point because it's penetrating Saudi also quickly, right? And it's definitely ahead of Amazon here now in this market. And Noon also gives you access to Namshi and it's Noon is owned by Alabar, which is owns Zimar, right? So it's owned by PIF, which is the public investment fund of the Saudi government. In at least for general categories, tends to be the first port of call along with the others.
Right. And I think, again, a lot of questions coming on the channel front, and this is the last one that we take because I think everybody's excited to figure out how do we build the channel there. So within offline, right, I'm assuming is modern trade a larger market there than general trade?
Yes.
So then
general trade in a lot of parts of Dubai is actually non-existent, right?
So then I think it's more of organized retail there versus what is there in India. And then I think there was a question around, what is the payment terms that distributors and retailers have. I think those would be fairly sorted out there, right? In India, payment terms go very, very right. But I think they're considering it's more of modern retail and more organized retail. I think bad debts or / let's say credit periods would not be as bad as what could happen in India today.
Less of a challenge, Less of a challenge.
Cool. I think, Sudhir, thank you so much for your time. Really appreciate you and the team giving out time. We are all there in the community, D2C Middle East. So I think there will be a flurry of questions coming in from people. So maybe you could set up some time. And I think there are somebody just asked, how do we contact you, Sudhir? So the answer to that is he's there on the community, guys. Please feel free to ping him, bother him as much as you can. I think he'll be happy to make that. Fortunately, he's made a day job out of it, so he has no other option but to answer.
Guys, I am really proud of the D2C community in India and what's been created. It's just astounding and great to see more growth in the Middle East. And if I can help.
Cool. All right, guys. Thank you so much for your time. Thank you, Sudhir. Thank you, team Startify. Thank you, folks, for joining in.
Yeah.
Cool.
Much. See you. Welcome. See you, Habibis in the Middle East.